Hello, everyone. Welcome back to Edwards Trades. I'm here again to talk about the overall broad market, the Spies, the QQQs, as well as a core list of companies. First and foremost, I would like to apologize for not making a video about the inflation report that was out prior weeks. I do apologize for not making those videos. I've been kind of busy, with school starting up and all this, life and stuff like that. So I will still post regularly. I'm gonna, make it a habit of posting every week and not have these, pauses continue and stuff like that. So again, I do apologize, but I'm here now, so I'll bring you guys up to speed of what happened. First and foremost, the last video I mentioned, we were waiting on inflation data to come out, and basically inflation numbers came out relatively positive. The numbers dropped by 1%. It's not a whole lot, but that still was enough to allow the market to rally from the last video made till now. Retail sales, which was that came out this, I believe it was Friday, if I'm not mistaken, which was the 18th. Retail sales remained the same, as well as the FOMC meeting minutes. They were just saying that because inflation kind of eased and there wasn't really that much restriction being put into place, that they expect the Feds to be a little less hawkish. In other words, we're going to have, I believe, this upcoming Friday, which is going to be the 26th, we're going to have Federal Jerome Powell speak on whether or not he's going to raise interest rates by 0.25% basis points, or he's going to either, which would equal to 1% interest rates, or he's going to be a little less hawkish and keep interest rates at a flat, 0.75%, which is where we're currently at after. I believe it was, which is where we're currently sitting at right now as far as interest rates goes. So again, just a recap, inflation did ease down by 1%. Retail sales remained the same. Job outlooks were kind of a little bit less, but not too crazy. But overall, the market sentiment has been relatively positive from that inflation report till now. Again, major economic news outlook to watch out for this week is this Friday, because Jerome Powell is going to speak, and that he's going to discuss whether or not he's going to raise interest rates by 0.25% basis points, or he's going to keep it the same, which at a flat rate of 0.75% basis points. And so he's going to speak at around 10 a.m. August 26th, so look out for that. But now let's get into the major indexes such as SPY, and basically what has happened ever since the last video I made. The market did kind of rally quite a bit, as you can see here. As far as let's go to the weekly time frame. We did have a little bit of selling pressure take place. We do have a shooting star reversal pattern, which basically indicates that there is going to be more than likely bearish sentiment taking place. Now, what I mean by that is that because of the fact that, as I mentioned previously in my other videos, that we've kind of been on a steady uptrend these past couple of weeks since the start of July. So we're finally seeing some pullback being taking place, some profit takers, if you put it lightly. So we're kind of seeing the market pull back, especially during I think, when was this day? During Friday, which was the 19th trading session, we did have some selling pressure take place all across a broad market. We ended on a red day, and if we take a look at the drawings here, if we were to zoom out here, as you can see during SPY, we have been rejecting this trend line that I drawn out here from the start of this year. So we could be seeing the market possibly pull back further down. And what I mean by that is that since we have been rallying quite a while, the whole month of July has been fairly bullish. One could assume, from what I'm seeing here, that we're seeing some sort of a pullback taking place. Now, what I mean by a pullback is that typically the market needs to cool down, and there's a lot profit takers need to take profit, right? So if I were to bring up the Fibonacci retracements here, again, Fibonacci basically reveals whether or not pullbacks are considered healthy or not healthy, and so on and so forth. Since we basically have a retracement of 100%, so the market can only move up from one range to another, right? And basically what you guys just need to understand is that we have continuous upside movement, and we're finally seeing a pullback being taken place. That doesn't technically mean that, you know, we're back to being into bear market territory. However, I would like to, you know, have a fair warning that as far as technicals go in the overall market, we have been respecting these higher low trends taking place. So to put into retrospective, we could be having a higher low situation taking place, right? And maybe this pullback that we are seeing at the moment is fairly healthy, continuing this bullish momentum and upside. So the 23.6 retracement. So if the SPY were to basically come back down, retrace 418 or 417 roughly in this area and bounce up, the market sentiment is overall bullish, and we can still be seeing some more upside potential throughout the upcoming weeks as well as the rest of the year. Now, I'm gonna go ahead and give the worst case and best case scenario for SPYs and the QQQ. So I'm go ahead and get rid of this, right? So because of the fact that inflation has kind of eased, and you know there's been a lot of fairly good news throughout the overall economy, it doesn't necessarily mean that we're out of the woods yet, because two scenarios could play out. We could see. If I go ahead and get a drawing here real quick. We could technically see a pullback being taken place here and maybe have some sort of a higher low formation here and continue to break from this upside here, break this overall trend line. But from prior history, as you can tell here, we've been rejecting this zone, this trend line here. We hit this marker, come back down, and then we came back here and came back down. We could be seeing from a wider perspective, if we go to the weekly time frame here, again, we could be seeing maybe more selling pressure being taking place. And again, as I mentioned earlier, a shooting star reversal pattern or candlestick pattern is technically bearish. It means that we could be seeing a reversal in the overall weekly trend. So we could be seeing some downside selling pressure throughout the upcoming weeks. It really just depends how the economic factors like, you know, inflation and Jerome Powell speaking this Friday about interest rates, that all kind of depends if buyers are willing to step up and continue this bullish trend. But getting into the technical levels, which is what I'm going to explain now. Overall, we've rejected this trend. We've rejected this resistance of 429, which was from throughout history, was kind of big and crucial throughout the month of January, February, March, April, basically till May. As you can see here, we rejected it roughly once, twice, you could say, and 3 times here. This kind of range or zone here is kind of crucial here, and as you can see here, we've rejected it, especially last week's trading session. So now we finally managed to gap down during Friday's trading session. Friday morning we've gapped down, and now we're potentially seeing the futures market currently in the red. So again, as far as, you know, technical levels that we're looking out for, if the market's able to if the market wants to remain bullish, we have to again try to bounce off here, which is, I believe, let me go ahead and get the exit out of here. Let me go ahead and do this. I believe it's the levels that we would need to look out for would be right around here, which is 416. And with that being said, which is roughly 416, 417. Pulling out the Fibonacci's retracement here, we don't want to see, you know, a healthy pullback will be right around here, 38.2 retracement. So I mean, as long as the market's willing to respect the 38.2, even we can say the 50 retracement pattern, as long as we're able to respect these levels here, I mean, the market's still fairly bullish. But again, you remember we had 4 weeks of upside movement, 4 weeks of green. You know, a pullback is technically needed, so this is possibly what we're seeing. And this is basically what I'm looking at for SPY. So again, we could be seeing a situation where we have, you know, some selling pressure take place and we can bounce up like this. Or let's say, for example, we want to retrace a little lower, maybe come back to, you know, prior resistance levels, maybe here, even as far as to say 401.50, which is 50% retracement, which is pretty healthy. We could be seeing some sort of formation like this take place in the near future. But I'm expecting, again, some selling pressure to take place because we haven't really had a pullback ever since the upside break of 405, or excuse me, is this 405 here? Right around 405 area. So again, overall fairly healthy. Again, a lot of selling pressure taking place. We're just expecting a pullback. But enough of me rambling. Let's go ahead and talk about the QQQs. So, oh, whoops, not it. Excuse me. Here we go. So, pretty much just like SPY, we gapped down during Friday's trading session. We're seeing some sort of pullback being taken place. We had a doji take place during the 16th, which I believe again was I believe it was Thursday or Wednesday of last week. But again, overall bigger picture is that, again, we're just seeing some sort of pullback being taken place. It could be a higher low pullback being taken place. Overall, fairly bullish. Again, we don't want, as far as technical levels here, as far as this range, we've been respecting this overall trend line take place. Let me go ahead and fix this real quick. And, we could be seeing maybe if we could be retracing all the way back down to, I believe this was June's, sideways consolidation phase here. If we're able to bounce off this bounce off 312, we could be seeing more upside movement in the near future. But again, I do expect some red days to follow throughout this week. And, depending on what Jerome Powell says, we could be seeing some more upside or downside movement. But overall, fairly bullish. Again, I probably expect selling pressure to take place, but nothing to worry about. But again, respectable levels to look out for. Again, we were rejecting this. Let me go ahead and fix this here because this is kind of wrong here. Actually, yeah. So again, here we've rejected these levels here, which was I don't know why it's not showing here, but we've been rejecting this. Let me go ahead and extend this here. Oh gosh, I apologize. My bad. Right here, we've kind of been rejecting around 330 here, which is May's resistance level. We weren't able to hold above it, and now we've kind of managed to come back down. But the next bounce would be 312, which was June's kind of consolidation of bull flag fake out. And yeah, so we don't want us to break these levels. We want to be able to hold here sideways is good. As long as we hold these levels here, I mean the market is overall bullish. So I really wouldn't worry too much about the selling pressure or this pullback taking place. But overall, market is still fairly bullish in the long term. But just expect some selling pressure to take place. Nothing really to worry about here. But again, just like SPY, we're just pulling back, and so on and so forth. So let's take a look at Apple real quick. So going into Apple from a weekly perspective, again, we've been rallying for quite a while. As you can see, we have like 1, 2, 3, 4, 5, 6 bars of green. We did again form a shooting star reversal, also known as a gravestone doji, and that typically, there was a lot of selling pressure taking place around 176, and sellers were able to push the price back down at a close of 170. So selling, a lot of profit takers did take place during Friday's trading session. And typically this is a sign this doji candle-like structure here is typically a sign of a bearish reversal pattern. So major levels to look out for: rejection above 176. We gapped down Friday's trading session. If we open Monday's trading session below 170, I expect more selling pressure to take place. But the overall trend line, bigger picture, is that we are respecting this white trend line that I've drawn out here. We could be seeing a retracement, right? If we were to break down, possible retracement from, let me go ahead and draw, to 160, 166, 67. And then a bounce and break of 170 to create, again, higher highs and higher lows. As I mentioned in my other videos, which is technically bullish, nothing to worry about. Possibly fill this gap range here, maybe possibly go as low as 165. But as long as we remain this trend line, the market's fairly bullish. So I really wouldn't worry too much about it. But again, technical levels to look out for. We want to hold one. If we want to hold 170. If not, we're going to see a retracement back down to 168 and 168. Pullback is okay. Nothing really to worry about, but I'm going to move on to Tesla. So Tesla kind of broke out of this channel here. But again, if we go into the 4-hour time frame, here we did have some cup and handle formation. We did manage to break out of this overall trend line that I've drawn out here, but still Again, major technical levels to look out for. If we break 878, we could be seeing a retracement all the way back down to 760, and possibly 760 here. And if we were to remain bullish, we have to break and hold above 9. I believe this is 9. I would say 923, 920 here. So again, watch for a break below 880 for more selling pressure to take place, or break and hold above 918. But as long as we both hold above 880, we could be seeing some sideways consolidation before a move to the upside. But again, I do expect a little bit of selling pressure to take place, especially since we do have the the Tesla stock split taking place. I don't know when that's going to happen, but again, I would just be a little cautious with Tesla. Going to move on to Microsoft. So fairly quick technical levels to look out for. Again, we did reject this major resistance level right around. Hold on. We did have a major resistance right around 295-ish area here. I would say like 292. We rejected it during last week's trading session, and we're gapping down. Again, we're waiting for a bounce of around 280. If it can hold above 280, we could just be seeing another bounce higher low formation, continuous upside movement. But again, rejection above here, especially throughout prior history. Again, we want to hold above 280. And if we break below 280, the next level will be around 270. If we manage to move up, the next target levels will be around 300. And yeah, so I'm going to go ahead and move on to AMD and Nvidia, which are my two favorite companies. Let me go ahead and draw this out here real quick. But yeah, I appreciate you guys sticking through this video. I know it's long, and I apologize again for being so late into making this video tonight. But I'm really, gonna do my best to post consistently daily. But again, here, I'm gonna go ahead and continue real quick. So AMD. Advanced Micro Devices. We did, again, just like every other major indexes, the tech sector, we did gap down. We were kind of sideways for quite a few weeks here, and we finally managed to have some selling pressure take place during Friday's trading session. We gapped down, and now we closed above this. Excuse me. We closed around 95. Major levels to look out for. If we break below 94 Monday's trading session, I expect more selling pressure to take place all the way back down to roughly $90. If we were able to hold above 94 around that general area, the next levels or prior resistance above would be $98, and anything above that would be 103. So again, just to reiterate, we must hold 94. If we break 94, the next lower level will be 90. If we hold above 94 and we see some more upside, we must break 98 to move on to 103. And also, I would like to point out here that psychological resistance seems to be right around 101 area. So I'm going to go ahead and make a note around here. As you can see, we did have a lot of rejection around this region here, especially throughout last week. We've been just sideways here, consolidation here, and we finally managed to break down and weren't able to hold above 100. So I'm going to go ahead and make a note of that. So generally speaking, psychological resistance is right around 101 area, which would be the 200 EMA, but like I said, 94 must hold. Break hold 94, we go to 90. If we hold above 94 and want to see upside, 98 to 101 and then 103. We're going to take a look at Nvidia, and that would be the last, and as well as crypto as well. So again, rejecting 192, which was prior resistance throughout May. And as well as around April, rejection. We weren't able to break above 192. We managed to break down and fall over. We're going to see whether or not this holds this trend line here that I've drawn out here. If it does manage to hold this trend line, again, it could be just a higher low formation, upward channel moving on and so forth. But again, levels that we need to look out for. Right now, we did close below 180. I believe it's 180. We could be seeing some more downside pressure if we break this trend line here all the way back down to 160. But again, it's just more like upward movement. If we want to continue to remain bullish, we got to break 192, and as well as this overall trend line that I've drawn out here. And then the next level will be 208, 209 roughly. And then I'm going to go ahead and go briefly over crypto, because I know crypto, or Bitcoin, because I know Bitcoin has been getting hammered recently, especially with all the regulations taking place. But yeah, so let me go ahead and do that real quick. Here it is. So, roughly, generally speaking, Bitcoin has been taking a lot of selling pressure taking place. We weren't able to hold above 24,000 here, right around this region. We're just in this sideways channel here, and we're generally just not. We just can't hold above 23,000. I know there's been a lot of regulations and. Excuse me, there's been a lot of regulations taking place across the crypto market. They seem to be more impacted than stocks are as far as a pullback being taking place. So, generally speak, or as far as technical goes, whoops, didn't mean to do that. As far as technical goes, really here, it's kind of like, it's just cryptos have been taking quite a hit. And I'm not sure how low it can go, but I'm going to try to get into basically my general outlook is that the selling pressure for crypto has been kind of rough and generally bleak. So we did see a lot of selling pressure and we weren't able to hold above 23,000, and now we're currently sitting at 21,000. So levels to look out for. If we break below 20K, the next level would possibly be right around 12K. But if we're able to hold above 12K, or not, excuse me, if we break below 20K, the next possible level will be 12,000. If we hold above 20 and we're able to get back above 23, which is psychological resistance, the next level major breakout will be 28. And then after that, the next level that we need to look out for would be right around, I believe it's right here, would be 30,000 area, and then, continuous upside. But yeah, so that's the overall outlook for the market. Again, general synopsis and a run back. Inflation did ease quite a bit by 1%. Retail sales remain the same. The overall economy looks positive. We're waiting for this Friday for Jerome Powell to speak on whether or not he's going to raise interest rates, which is going to be this Friday, August 26th at 10 a.m. I expect markets to move lower. On the consensus that we've been rallying for, the past 4 weeks, 5 weeks, I think, steady greens, and yeah, we could be seeing a pullback take place. And overall, that's just I mentioned the overall levels to look out for. And yeah, so that's my overall prediction of this week's market outlook. Again, I do apologize for posting so late, and I'm gonna, fix my schedule to post my videos every week, and I'll bring you guys up to speed again, in case I miss out and stuff like that. But again, I apologize. I apologize. I know I keep saying that, but I apologize for not posting. I know it's been a minute, but I'm back. I'm gonna keep making these videos, so don't worry about that. I'm gonna keep making my predictions, so I'm not gonna go away anytime soon. But thank you guys for tuning in on today's today's video. If you guys are still here watching, listening in to me, hearing me ramble, I appreciate it. I know that that these videos are kind of long, and I'm really trying to narrow it down to less than 30 minutes or lower, but it does take some time to come up with these analysis and these thoughts process that I'm trying to explain it quickly and simply as possible. But I really do appreciate you guys who stick around and watch my videos, and I again would really appreciate a thumbs up, a like, a comment, I want to, I really want to do a video on, technicals and get really in depth with it, like, patterns that I'm seeing and stuff like that, if you guys really want me to. But, I would like for some feedback. If you guys don't mind it, just share it down below in the comment section. And, again, give my videos a like and a thumbs up. And yeah, thank you guys for tuning in on Edwards Trades. I'll see you guys at the end of this week. For those of you guys who are trading, good luck. Be worrisome. Be cautious. Make good trades. Let's make some money this week. And yeah, I'll see you in the next video. Peace.